Hey everybody, welcome back to Taking Trades. So today is an exciting episode because I'm going to give you a small account challenge update. I'm going to talk about two new positions that I put on in the account, trading options on two new stocks that I haven't talked about before in the past. And I'm going to also show you the percent that I am now up in the account in terms of cash. I'm going to show you the account, I'll open it up, I'll show you the exact cash amounts I have, I'll show you the positions I have on, and then I'm just going to kind of review the positions that I have, talk about how I'm going to manage them moving forward and what my plans are for them in the future. So this is going to be a short video, so I'd appreciate if you watch all the way through. It'll just be a quick hitter. Let's go. All right, TastyWorks trading platform. Again, I'll say it right off the bat. If you want to open a TastyWorks account and use this platform and trade stocks, trade options, and just have a silky smooth experience, then jump down in the link below in the description, and I've got a link to TastyWorks. Use that link, sign up for an account, fund it with $2,000, and you'll support Taking Trades, the YouTube channel. So I really appreciate that. So let's get to it. I put on two new positions and I want to walk through them with you and just talk about why I put them on, what the plan is moving forward, and what the time frame is for all of them, because they are all options trades. So you can see on here I have currently 5 positions on. And you remember last week I was talking about X, which is US Steel, CGC, and UNG, so Canopy Growth and the United Gas Fund for natural gas. So we'll go through all of these, but I wanted to start first off with Roku and FedEx. And let's talk about FedEx first. So this position that I put on this morning, first let me just show you why I liked it. And yesterday, a lot of us were watching FedEx. They had earnings a couple of days ago, and things just dumped. They missed earnings. There was a lot of stuff going on with the company. There's been some talk about them parting ways with Amazon in terms of shipping and using their delivery methods. And so the stock just took a big fall to the downside, put in a big red candle. Things were not good yesterday. Then I was watching this morning when I opened up. It pushed down a little, then started to climb. It was kind of just steady right here and kind of having a contrarian, tasty trade type approach to the markets that I like and I prefer. I like to watch for stocks to kind of get dumped a little bit, and that removes some of the downside. So when I saw this earnings miss and a big drop to the downside, I said to myself, okay, it's at its lows. It's even down below a couple of these touch points in here, and it's just really been beat up. So I thought this would be perfect. I'll put on an iron condor, and that will mean that I'm just going to put a bet on both sides of the price action. So what I did was I said, I don't think it's going to go any lower than a point down here, and I said, I don't think it's going to go any higher than a point up here, sort of sandwiching the two. And then I mitigated my risk by putting basically a stop loss further out on each end. And I'm going to show that to you right now. So if I come to the trade, here's my trade. This brown line, this is where the price is trading right now. So it's trading at 146.34. And you can see on the put side that I went ahead and sold the 135 puts, and then I bought the 130 puts. So it's a $5 wide, what they call a wing on an iron condor. And basically what an iron condor is it's a selling a put spread and then selling a call spread. So this is the put spread. On the other end, we're selling the call spread. So here we've got a $5 wing. So that's my risk, is from here to here. If it goes below 130, I'm protected by this put that I bought. And then the same thing goes on the call side. I sold the 155 calls and I bought the 160 calls. So that's a $5 wide wing, and my risk is between 155 and 160. So once I had that set up, then what I like to do in TastyWorks is I like to analyze it. I look at the curve. So coming in here, this just shows you a nice setup with these lines being one standard deviation. And the brown bar in here, that's the expected move of this stock. So right now, if we look at my calls and my puts, the P means puts, the C means calls, you can see the expected move is actually above where my call is. So we'll see what happens. Right now at 146.33, we're pretty close to dead center. We're a little towards the call side. So if this position does choose to move further up and climb in value and start to challenge my calls, my first call strike right here, then what I'll probably do, and depending on the situation, but an option I have is to go ahead and take these puts and roll them up and collect a credit for rolling them up. This would have to be challenging a little higher, because then if this does move higher, it basically will say that these puts will not be hit unless there's some crazy black swan move, some crazy once in a 10-year wild event to occur for them to get challenged. So they're kind of not serving any purpose being this far down if the price moves up into the 150s. So what I could do is then roll them closer to the price, collect a little bit of premium credit, and then what that helps do is helps buffer me on the upside. So let's say, for example, I have a $5 wing here, so my risk is $5 per share. But let's say I roll up and I collect $1 in credit. That means I just narrowed this to $4 risk. It's all about mitigating your risk while you're giving yourself an opportunity or the time to be correct. Ideally on this, I want the price to expire between here and here. I want the contract to just expire worthless. Price action to just pinball around and stay in between. Let this volatility number come down and let the expiration date hit and pass. So the reason I chose to go with FedEx is I don't like to sell any premium on options trades if IV rank is below 30. So we were at 36, so that's why I went ahead and took it. And because there's not a lot of volatility in the markets right now, so there's a lot of low ranking IV, which makes selling premium very, very hard. So trying to stick to my rules and standards, and that is I'm not selling premium on anything below 30 on the IV rank scale. So that was FedEx. Let's flip back over to my positions and let's look at the other new one, which is Roku. We're going to open this up. Now, Roku is not an iron condor. Roku is actually a short put spread. And you can see I sold the 125 puts and I bought the 120 puts. And so let's come over to the trade tab and let's actually look at this. So you can see right here, the brown line, that is the current price. And way out here at $125, I went ahead and sold this put, and the 120 put I bought. So my risk on this is between 125 and 120. And these are out considered roughly a 30 delta put spread, but technically a 28 delta put spread. So my hope on this is a bullish trade. I'm hoping that Roku continues to move higher. And recently, today, it just had a move to the upside. So let's look at the chart. Yeah, so today it opened, it was kind of lingering right in here. And then as you can see, it's gone ahead and pushed way up. And now we were actually at a high of, let's see what our high was today. We were at 141 at one point. So this was looking really good for this position on Roku. I was up a lot more on it today. The P&L open just kind of tracks it over time and gives me an idea of how much I'm up so that I'll be aware of when I get close to 50% profit, so then I can possibly choose to close the position out. But that on Roku, if I go back to the trade tab and we look at this curve, you can see right here, expected move on this is a lot larger, and I can actually zoom this in a little bit. There you go. Expected move is from 115 to 162.50 right in there. So you can see that it is absorbing my put spread, so a little more risk here. And what we'll do is we'll just wait and see what happens. When we get to 21 days, I'll make a decision about possibly rolling out more time, but I'm not going to make any adjustments to this before that. I'm going to watch this down to 21 days and we'll go from there. So that is the trade on Roku. And then the other three trades I have were on US Steel, CGC, and UNG. Being that a lot of you like to trade natural gas, let's open up UNG and look in here. So I have two contracts. I went ahead and sold a put spread in here, the 1650 by 1550. And if we come over to the trade tab, we can look at it in here. So right now it's trading at $17.38, and my first strike is at 1650, and my risk is $1 wide here. So we'll be watching that really closely to see what's going to happen. Again, on this one, I'm not going to touch it until we get to 21 days out. And right now, days to expiration, we have 36 days to expiration. So I won't touch that for roughly another 15 days. And then at that point, I'll see where we are and make some adjustments from there. CGC is our shining star today. We open that one up. We've got another put spread in here, a short put spread. It's the 18 by 16. And if I look in here at the January 24th of 2020, price is right here at $20.26. I went ahead and sold the 18 puts and bought the 16 puts. So my risk is between 18 and 16, $2 per share risk with protection to the downside below that point. This one is looking really good because when I jumped into it, we were, I believe, closer to a 30 delta, and now we're out 27 delta. So the position has gained a little bit, as you can see in here. We're up $18 on open for this one, and actually up 29% on the position. So this P&L open is really nice because when this number indicates 50%, that's when I know I can go ahead and start to manage my trades. It's common for me to get to 50% profit and then close out my position and then redeploy that capital to something else. So we'll see how things go. We'll watch this, and if we get to 50%, I'll update you guys on what I'm doing on that. US Steel, down on this one right now. This is an iron condor, and let's just go ahead and look at it on the trade tab first. So I put this one out right before earnings. They have earnings on the 29th, and I put my expiration out on the 24th, just taking advantage of a little bit of increased volatility because of earnings, but without actually going through earnings with US Steel. It's trading at 1344. You can see that my short put spread, the put that I sold at 1150, that strike right here, and then I went ahead and sold the call at 1450 up above. So we're looking pretty good. It's actually challenging the call side more than the put side. So what we could do at some point here is if it continues to challenge the call side, I can roll my puts up, collect a credit, and help close the gap on my risk here while giving it time to drift back down and expire in between the two short calls that I sold. So that is my position on US Steel. And then what I wanted to go ahead and do is also talk a little bit about my position here. And what I'd like to do is just give you an idea of an actual percentage that I'm up right now. And so let's go ahead and take a look in here. And what you can see is I've got different buying power, number of trades. I've got my long deltas that are beta weighted and all my extrinsic values. But what I like to click is this BAL for balance. And I just like to open that up for you guys so you can see actually inside the account, and you can see exactly what's going on. And so what's nice about this is you can see the cash right now is $3,489.09. Now, when I started this challenge, I started out with a $3,000 account with a goal of trying to grow it by 20% over the first year. And right now, I just did a calculation. With this cash in the account, we're up 16.3%. So we're actually making really good progress towards the 20%, being that we've only been trading in this account for a few weeks. So this is actually a really good progress. The thing to be aware of, though, is that cash is the equivalent of if all of these close at 100% gain. So it depends on what happens in here. I close a lot of my positions at 50%. So if I close each of these positions at 50%, then that would mean that we'd be up about 8.15% overall, which is great as well because we're this early on. But right now, the cash in the account, because you collect your premium right away, my cash is $34.8909, showing 16%. So 16% gain in a few weeks on my account is more than acceptable. I'm very excited about it. I'm going to keep churning along, keep looking for positions. I'm looking for high volatility, so things are a little slow right now. But as I find more volatility, I'll put on more trades. I'll keep you guys updated. If you have any questions about the small account challenge or any questions about TastyWorks or Tasty Trades, if you want to set up a TastyWorks account, like I said, drop down the description. There's a link there. Click that, open an account, fund it with $2,000. That'll give Taking Trades a referral credit. And if I get enough referral credits, I have something exciting that I want to do for the channel, but I'm going to wait to see if I get some funded accounts first. I think there's 27 open accounts, but no one yet has funded their account. And that's kind of the final step of that deal is once it's funded, then I get the official credit. So you 27 people who opened accounts, go fund those accounts and let's get the referral credits working because I got something exciting for you. So questions, drop them below. Hope everybody had a green day. And we'll see you next time.